Hi, you're watching Investor Insights, and in this video I'd like to talk about CFDs. Now, CFDs stands for Contract for Difference, and it's basically a platform, a trading platform by which you can buy and sell shares using a stupid amount of leverage. The best way to look at CFDs is if you're feeling too rich, if you want to pull all your hair out, if you're a sucker for punishment, if you just have a feeling that you want to get involved with something that you really don't understand at all, and a lot of people actually don't, and you like risk, but risk of such magnitude that trading with CFDs is just like playing with a time bomb. But anyway, these contracts for difference, when you trade them, you have to understand that you do not own any of the shares. You're just owning these instruments, these weapons of mass wealth destruction, in order to try and generate a return. So what a CFD trade would look like is, for example, the cost of buying or selling expensive shares is huge, and you have to outlay a lot of capital. Sometimes people don't have that capital. So what a lot of these companies, these CFD, these market makers are issuing are a form of highly leveraged products, which allows you to trade those stocks but using an incredible amount of leverage. So let me give you an example. If you were to buy BHP and you wanted to trade it in size, and let's pretend that BHP's price today is $30. It doesn't matter what the price is. We're just going to use $30 as its price. If you were to transact 10,000 shares of them in any normal stock trading account, you're going to need $300,000 in order to own those 10,000 shares of BHP. This is before you have to pay for brokerage, and the cheapest platform would be giving you 0.1%. So 0.1% of 300 grand would be $300. Right? So to buy and sell, you would need $600 in brokerage roughly. Most people don't have that. So what they do is they turn to a CFD platform. And in this CFD platform, they will lend you approximately 10 to 20 times your money. So the leverage obviously is going to be 100 to 200%. Actually, that's not quite right. 20 times, we'll just say they will lend you 95% of the value of the trade. So your 10,000 BHP shares, let's say that they lend you 10 times, you would have to cough up only $30,000, and they will lend you the other $270,000. Now what happens is, because of the power of leverage, your returns are just going to be ridiculous on the up and down side. Remember that one. Say you're gonna outlay 30 grand, and with your 30 grand you can now actually buy and sell 10,000 shares of BHP to the tune of to the real value of $300,000. Say BHP moves $1. What happens is that because you've got 10,000 of them, you're going to make $10,000. Easy maths. So your $30,000 is going to be now worth $40,000. And that's a huge move, because it's like a 3% move in the stock is now giving you a 33% move in your portfolio. And it's great. Flip side of the coin, you can work it out. You're down 10 grand, the stock moves $1, you're down 10 grand, you're screwed. Leverage works both ways. But let me discuss the downside of using the CFDs. And there's basically two of them. The first one, obviously, is the huge amount of leverage. And that multiplies your risk. But secondly, there's a cost to the leverage. You have to pay them the interest on that $270,000 every day that you hold the position. Now, it may not sound like much, but it is, because that interest is taken out every bloody day. And if you hold a position for a month, you're going to find that it's going to eat into your capital. Imagine that. They charge you 1/365th of the interest dated every single day. That all adds up. The second downside is that the brokerage is not on your $30,000. The brokerage is on the full $300,000. So the CFD platform is actually treating your trade as a full completed trade of $300,000, not your $30,000. So if you think that you can get away with 0.1% of 30 grand, think again. It's not. It's going to be 0.1% of 300 grand. So you got to cough up the same brokerage as what you would normally pay if you had to trade 10,000 BHP shares using your own money. Now these platforms, or CFDs I should just say, are not recognized and are illegal in the US. That's got to be telling you something. I myself have had to read up on the CFDs and the manuals and whatever that they send you. I was just curious, and there is no way in hell that I would involve myself with a CFD, because if you don't have the money, you shouldn't be trading using such insane leverage. So getting back to CFDs, I seriously do not recommend them, unless of course you've got money to burn and you want to pull all your hair out. But if you just want to do something for kicks, just take your money and, as I always say, flush it down the toilet or burn it.